In 2007, Mike and I wrote an article for Probate and Property, which is a publication by the American Bar Association, in which it was entitled Thinking About the Impossible for 2010. No estate tax and no step up in basis, but a carryover basis system. I'll bet nobody even read it. We gave sample language in there, and people just ignored it. In fact, last fall, I remember in October, I had a program in North Dakota, and I said, you know, everybody here believes that Congress is going to change it so we don't have a no estate tax year for 2010. But just in case, here's some language. Please start putting it in your document. Here's a sample letter to write to your clients now, inviting them to come in just in case it happens. I don't know whether anybody sent it, but it was certainly very few. And then on December 16th, we knew we were going to have a year without estate tax, at least to start, because Nancy Pelosi sent the House of Representatives home. And even though Max Baucus, the chair of the Senate Finance Committee, and Representative Pomeroy from North Dakota, who's a big player on the House Ways and Means Committee, said, when we come back in January, we are going to retroactively reinstate the estate tax back to January 1, 2010. Believe it, it's going to happen. And I thought to myself, why are they saying that? If you couldn't get it done in 2009, and since the players in 2010 are going to be the same players in 2009, what makes them think it's going to happen? And then I saw the thing that made me convinced it was never going to happen. And that's when John Kyle, the senator from Arizona, the biggest proponent for the permanent repeal for estate tax, went on CNN and said, this is the most wonderful news Americans could get. No estate tax, and we Republicans have delivered on our contract with America. We promised you in 1994 we would repeal the estate tax, and we've delivered. And I thought to myself, that's the Republican position. What is the chance that they would agree next year to take that announcement away? I don't think it's going to happen. Well, they said it was going to happen in January. Did it happen in January? No. Then they said it'll be in February, and we come back after President's birthday weekend. You've got to remember, you can't work the congressmen and senators too much. 60 days a year is the max. I mean, 60 days is the max you can expect a senator or congressman to work. I mean, gee, you know, what are you, putting them in slavery? Anyway, so they come back for 4 days. Did it happen? No. Then March. We're going to do this before we break for Easter. Did it happen? No. Then it was going to be April. I'll give you dollars to donuts. It's not going to happen in April either. And by June, I think you will find that all the representatives, who all face election next fall, and 1/3 of the senators are going to be on the campaign trail. I think the probability of a retroactive reintroduction of the estate tax is exceptionally low. There's only one chance, and that's if the Democrats do it as a budget reconciliation matter. But the problem is that it will cost money, because even if they put the estate tax back in this year, if they want that $3.5 million exemption and 45% rate to stay, that will actually be a reduction in taxes beginning in 2011, because in 2011 under the Internal Revenue Code, the exemptions go back to $1 million and the rate goes back to 55%. So I think that what you'll find is nothing will happen this year. Can you guarantee that to your clients? Heck no. And there are a tremendous number of complications relating to that. It's very, very complicated. And there are, additional things if you're in New York, because New York still has an estate tax. In fact, there's even a question as to whether the New York estate tax exemption this year is $1 million or whether it's dropped actually to $100,000. And again, that's an unknown. It's probably $1 million. The one thing I was able to do is I got the New York Tax Commission to announce that if property went into a type of marital deduction trust called a Q-tip, that New York would allow the estate, even though it doesn't have to file an estate tax return this year, because there is no estate tax return this year for federal purposes, you can elect for that trust nonetheless to qualify for the marital deduction for New York estate tax purposes. That's a very big deal indeed. In any event, that's kind of where it is. I think you will enter 2011 with $1 million exemption, a 55% rate, and next year they'll compromise it. My guess is that the compromise will wind up with an exemption of somewhere between $3.5 and $5 million and a rate somewhere between 35 and 40%. One of the reasons they can do that is because they have exempted the requirement that you have a balanced budget, the pay-go rule as it's called, for the alternative minimum tax for 2 years only, and then the estate tax using the 2009 parameters of a $3.5 million exemption and a 45% rate. The question is, how much will the Republicans want in addition? That was offered last year. The Republicans rejected it. And remember why the Republicans desperately do not want to even make a deal today for future years. The Republicans are in the weakest position in the House and Senate than they've been in 40 years. Everybody wants to negotiate from a position of strength. And next year, the Republicans are certainly going to have more representatives. They may even take the House back. They're certainly going to have more Senate seats. And as a consequence, they'll be in a stronger position to bargain for what they want. And that's why I don't even think the $3.5 million will be the level. I think they'll have to compromise and have it higher than that. And I think the rate will have to be lower than 45%. By the way, keep in mind that 18 states have an independent state death tax system. And I'm also going to forecast something else for you. Right now, if you pay a state death tax, you can take a deduction in purposes of determining the federal estate tax. So even though you pay 16% to New York, because you could deduct it for federal purposes, it really only costs you about 8.5%. I think Congress is going to eliminate that deduction. Why? Because they'll have to raise additional money in order to increase the exemption above $3.5 million, and the Republicans aren't going to accept $3.5 million. So they're going to have to come up with some tighteners. And there are two other tighteners they're going to use. One is something called a grantor retained annuity trust. And again, if you know nothing about it, you might want to, again, talk to Trish about looking at our system, because it will analyze it for you and tell you whether or not your client is an appropriate candidate for a grantor retained annuity trust. They've already proposed rules that would make those less effective as estate tax planning tools than they are today. The second thing they're going to do is to try to eliminate discounts in valuation. The name of the game in estate planning, estate tax planning, is valuation. Those discounts are going to go away. And so this would be the best year, if you have a client who's facing an estate tax problem, to do his or her planning, because I think it'll be tougher next year.